You were listening to chartingwealth.com for Friday, the 1st of July, 2016. What do we have going on in the market? Well, we always start on the program with IYY, which is a total market fund. It tracks the entire stock market. And what does it seem to be doing? Well, remember the big drop on our two-day candle representing Friday after the Brexit and Monday where the markets were dropping like a stone. Then we saw on the 29th that two-day candle, the market started to recover. And of course, what do we have happening over the course of the new two-day candle, the first day of the two-day candle? We have a green open box candle with a wick on top. Those of you who've taken our Hinkin-Ashi training that we put out a few weeks ago know what that means. Well, that means there's some strong up movement going on in the market. Still are negative on the derivative oscillator, but it's lost its downward momentum. And we do see the MACD and the signal line coming together. They've not crossed yet, but they are angling toward each other, which means a converging. And again, they've not converged and crossed, but they are getting closer. And lo and behold, if you look at the top wick on our Hinkin-Ashi candlestick, it touched where the market started plummeting down after the Brexit last Friday. Isn't that interesting? We talked about, again, not jumping in, following all the screaming ninnies, jumping in thinking, hey, I can buy anything going down in an inverse fund and I'm going to make money. No, we were in a confirmed down move, but when we pull back and look at our 4-hour chart, we had no ability to get into the 2 days of down movement on the 24th. That was Friday, and then the 27th of June. Then we started seeing the market tick over and move up. Actually started in the morning on Tuesday the 28th, and we have 3 full days of upward movement, a crossover on our short chart going up. And right after the crossover, we saw that was during the course of the past day on Thursday, we saw the derivative oscillator go green after we had a confirmed crossover again on the short chart. Is this a pullback or is this a change in trend? We do not know. How do we not know that? Well, the reason we don't know is because we are still in a confirmed down move since the crossover on our big chart, which is the controlling trend chart, that is the 2-day chart on the 15th of June. So we're waiting to see if something sets up. We are patient, are we not? We want to make sure that when you do jump into a move, you do it intelligently and you do it in a way that is going to, again, cut your risk and increase your potential of reward. That's what it's all about. We do this for one reason and one reason alone, and that is to make money. Now, again, we're not a stock calling service. Again, we are an education firm. We're asking you to practice with us. Do all of this on virtual trades. You can go to any online broker, set up an account, put $1 million in, become a virtual millionaire of virtual money. Then you start buying and selling and practicing. Once you get good, you can make up your own mind. Now let's go on the 2-day chart to SPY. That is Standard & Poor 500 is what that ETF represents, that symbol SPY, SPY. Again, the Standard & Poor 500, it actually rose above where the market started moving down on the candle ending on the 27th after the Brexit. We actually touched even higher. Again, it's another green open box candle with a wick on top. Derivative oscillator still in the negative. There hasn't been a crossing over yet on the MACD, but there is upward movement. If we look at the 4-hour chart, it looks very similar to what we saw on the IYY, the total market. That is 3 days. That is 6 candles of green upward box movement, and again ended with movement up in the morning and the afternoon on Thursday, the 30th of June. Now, we're going to go as far as our last index before we get to gold. We're going to go to the Qs. The Qs was up 1.61%. Oh, and for the record, total market up 1.41% for the day. S&P 500 up 1.36. The Qs up 1.16. It, too, has a green open box candle. Derivative oscillators lost energy. MACD is moving toward the signal line. If we go to the 4-hour chart, what do we see? Again, 6 candles of upward movement, a crossover on the morning of the Wednesday the 29th going up. Again, nice that our derivative oscillator and our MACD crossed about the same time. And again, this could be a pullback. And if the market moves back over and we get some red candle down movement, particularly if we get a crossover after what we would call happening right now a pullback where the market's moved on the short chart the opposite direction of the long chart. Again, to make really simple what we look for, we want to see the big chart, the 2-day chart, going in one direction. We then want to see the small chart move in the opposite direction, what we call a pullback, and then turn and go back in the same direction as the big chart. When and if that happens, that's when we look to get in and ride that extra movement, the safest way to do it. Sometimes it happens, sometimes it doesn't. And the beautiful thing about us, we can be patient. We're not traders on Wall Street that have to trade every day and move money around. We do not. Our trick is, first, don't lose money. Second, make money. And again, we're talking about virtual money. As you practice once you get good at reading a chart, you can do it on your own. And again, another thing that I mention all the time, there are people who I hear who will write me, they'll post something, I'm a value investor. What do the charts offer for me? Well, it's like anything else, man. You can go into an auto dealership. You're a car buyer. You can go buy a great car, but are you going to pay what's on the sticker? If you're a fool, you are. Why would you not get the best deal you can get? The charts help you do that. And again, value investor or not. Okay. Now, lastly, we're going to range back out to our 2-day chart, and we're going to take a look at gold. Gold was up 0.50%, so 0.5% for the day. Gold's at a confirmed up move on the 2-day chart. It has been since the 13th. Again, it rotated over on the MACD and the derivative oscillator at about the same time. That was the 13th of June. Had 2 days of down movement. Two-day candles of down movement. 4 days altogether on the 21st and the 23rd of June. And then started moving back up again. We will note the derivative oscillator actually has lost a little bit of energy over the last, the newest 2-day candle. It's only drawn the first day of it. It's only half complete. But the movement is below the peak on the 27th. So that's the reason the derivative oscillator is not heating up any further, is the burn off in energy and movement. We do have a green open box candle, but even going on 5 days later, we still don't have any strong upward movement. Again, up 0.5%. Again, no strong upward movement as far as our candlesticks go. We do continue to see our derivative oscillator sort of pittering around, but the MACD and the signal line are continuing to move up and diverge, which is a good sign. Let's look at the 4-hour chart, see what it tells us. What does it tell us? Well, it tells us that the market continues to just slide sideways, getting closer. It appears to a crossover going down. We haven't had that pullback yet for there to be the confirmed upward movement at this point. So continue to watch, just see what happens, and again, just be careful. Now, of course, well, that's where we'll leave that as this continues to slide sideways, getting concerning that the derivative oscillator on the short chart's losing its energy and the MACD and the signal line are getting much closer together to potentially move down. Now, what will change all this? Well, if the markets take a tumble, and this is simply a dead cat bounce with this up movement and everything rolls back over again going down, you'll see gold shoot up again most likely. But right now, it's just moving sideways. That is where we end the market on Thursday the 30th as we go into the 1st of July. We hope that you are having a wonderful week. Again, these are the summer doldrums. Remember the adage, sell in May and go away. Hardest time to trade is in the summer. Best time to trade is in the fall-winter trading zone that will be coming up in the not-too-distant future. We will keep you apprised. Again, practice. Perfect practice makes perfect. How do you get to Carnegie Hall? Practice. That's what we're doing. Just 10 minutes a day is all we ask. And hey, Don't beat yourself up if you can't always do it. Join us whenever you can. We love to hear from you. We did finish earlier today the inverse ETF training we had promised, how to make money when markets crash. We're going to be uploading that in the next day or so. It is in the can. We'll be getting that out to you as soon as possible. If you really like what we do here at Charting Wealth, I ask you to do two things only for us. Please go to iTunes, give us a 5-star rating, subscribe to us. Second, most of you who are listening via video are doing that using our insert on YouTube. Please go to YouTube and subscribe to our podcast. Once we hit 1,000, we have thousands listen every week, but once we hit 1,000 hardcore subscribers, we'll be able to do a lot of proprietary broadcasts directly to you via YouTube, and we would really like to hit that number soon. Thank you so much. God bless. Let us hear from you what else you need, what we're missing for you. Let us know. We're totally driven by what you need and want at chartingwealth.com.